Welcome to Markets Now. I'm Michelle Rourke with Allison Thompson with the Money Farm, and we've seen some mixed trade in both grain and livestock futures this morning. Right now, we're seeing in the grain complex, anyways, soybeans to the plus side, Allison, and it looks like maybe we're putting a little bit of Brazilian weather premium back in.
Yeah, we had a couple different things that are definitely helping soybeans out this morning. We had an export sale to unknown destinations for about 4 million bushels, which was really good to see. Most suspect that we're starting to see China come in here and do some buying. So hopefully that's them. If it is, hopefully we'll see more to come. But we also know that over the weekend, Brazil was expected to get some decent coverage of some rain in their dry areas. They did get some rain, but unfortunately just wasn't enough. So we did see some good follow through. And I think this is probably one of the first times we've seen them receive rain, see the word rain in forecasts over the weekend. And the market isn't trading lower because of it. So obviously there is starting to become a bit more concern in regards to how much they're getting because it's not being offset by the conditions there. They're still seeing some pretty hot temperatures. So they need more to carry them through, and the half an inch, less than an inch that they're getting over a weekend isn't enough. It's kind of been a rinse and repeat cycle here for the past couple weeks. And looking at forecasts going out further the next couple, looks like we're going to see more of the same pattern, and we're starting to see soybeans price that in.
All right. So at what point does the market say, hey, we've got a bigger problem? We're seeing, we've already seen some private estimates, and CONAB was down on their soybean production estimate for Brazil. At what point does the market get able to move past these resistance levels in soybeans we haven't been able to take out on the charts?
Right. Well, and even the USDA report was somewhat unfriendly in that respect, too. I think everybody was hoping that they would move it a little bit more, but we know they're going to be cautious. But unfortunately, the market is a number thing. They definitely watch for those new estimates to come through, and they're really pinpointing a number. I think they really want to see it fall below 150, and then we would really start to see that $14 mark come back into play. But honestly, here it's just we're kind of going to hit a slow patch between now and the beginning of the year. Brazil actually starts their carnival celebrations next week, and that'll take a lot of vacations for a lot of people, government agencies and things like that. So we might not get the good, accurate information that we have been getting out of there. So it might slow things down that way, which leaves the market with some uncertainty. So we're going to be watching weather forecasts very closely. I think that's going to move stuff in the near term. But in all honesty, no one really has a good handle on what's actually going on in South America. It's such a huge area that we're dealing with these adverse conditions. It's hard to really gauge. And not only that, we know that planting was late for soybeans. We don't know how much of the crop was switched to corn, how much was switched to cotton during that time, how those acres were kind of mixed up, and all of that is going to affect their second crop corn as well. So the market just it's kind of blankly looking at this, not knowing what the end result is going to be, and no one does. So the market is going to err on the side of caution until we do know more. And unfortunately, it could be until we start seeing harvest progress, until we get past Carnival, we go into the mid-Januaries. So I wouldn't expect to see a whole lot of fresh information in the near term, but I think we're going to remain in a weather market here going forward. Unfortunately, we're just not going to have any firm answers, kind of like we did here in the U.S. this past year.
Yeah, and so far we know that that's going to impact second crop corn in Brazil, but the corn market hasn't necessarily been trading that as of yet. Right now, as we speak, soybeans are higher, so corn is trying to follow, but it kind of gets caught in between the two markets between beans and wheat, doesn't it?
Yeah, it does. And that could be for other things as well, especially when we're still seeing demand kind of be lackluster on the corn side. Thankfully, Mexico has been a very good buyer, but we have yet to see really China step in. And there again, I think that's just because they're playing a wait and see game to see what happens in South America as far as their crop and production as well. And another thing to throw in the mix on corn and soybeans as well is Argentina's new president was sworn in yesterday. And I know he's going to be releasing some updated agenda items here this week. So it could just refrain a lot of farmers selling in South America as well. So there's a lot of different mix here of things going on. But yeah, corn's definitely been the slower mover of the two, but rightfully so. There's still a lot of time before we see an abundance of that second crop corn time for planting. But again, with the mix of acres down there this year, I would think at some point the market is going to realize that they're not going to be able to get planted, especially if we did see a lot of cotton get planted. Kind of rules out the case for seeing a lot of second crop corn.
Yeah. Well, I'm glad you mentioned the Argentina president, because I was going to ask you about what impact that might have on the market. The other thing that we've been hearing, in addition to the wheat business that we have seen from China, there's also talk about China buying corn. Do you think they're going to switch anything over to the U.S. and maybe go out the PNW or not?
I would hope so. And the PNW is a very good point to be watching as well, because we do know the Panama Canal is very slow. I've been hearing up to 3-week wait times. So technically, yes, China could come in and buy some corn and soybeans here, just like they did this morning, and they could still ship it out of the Gulf, but they're probably going to be paying more in freight costs because they are seeing that longer wait time at the Panama Canal to go through. So they're still dealing with some pretty bad water levels there. But otherwise, the PNW would be a very good market opening. And even especially for us up here in the northern areas, we would definitely start seeing some of that demand. And we have actually on the wheat side, our basis has become a lot more competitive on those rail shipment routes. So we are seeing some decent movement of some wheat. We just wish wheat prices, futures would go along with it, but basis has definitely improved. And I think that's where the key is going to be as far as gauging demand here in the near term. If prices for corn and wheat do remain pretty leveled here, it's the basis is going to do the talking. So just make sure that you're watching your basis bids and even looking at some further out deferred months that you normally start moving, because there are some opportunities there, and hopefully we'll see a run in futures by then. But there are definitely opportunities there. I would think that we should see some more PNW activity, but again, we'll have to see what inspections do here on a week-to-week basis, especially if that Panama Canal remains a concern. Could be something definitely worth watching here going into the new year.
Yeah. At least this China business, in the case of wheat, has gotten the funds to cover some of their massively record short position in the wheat complex. And so, hopefully that will continue. Do you think this was enough information to start spurring some of them to get out more or not?
Well, it was very interesting to see even the USDA on Friday increased exports for wheat just
Right.
because of the recent activity that we saw. Normally they don't do that. They go a couple weeks back and that's what they print. But they were actually looking at fresh data that week. Very impressive to see. So yes, there is a case that we could definitely see some more Chinese buying here. I hope we do. The market needs to see it. But the question is, what other varieties or what other classes of wheat are we going to see them buy? Hopefully we see an uptick in some of the other ones, because we know soft red winter wheat stocks are definitely low now compared to what the USDA was previously expecting. And it notably even could go lower if we continue to see some decent exports. But what about these other classes that are making it up? So I think there is still a need for demand here in the market, and that's what they're looking for. But so far we're on a good stepping stone here, making a good pace. I think they bought 41 million bushels just within their recent purchases, which is phenomenal for China. So obviously they have a need for it. I hope we just continue to see some weekly sales, some large sales. That's what the market needs to see.
Yeah. Wheat drifting a little this morning. Is that maybe the dollar being up or just a little profit taking, you think? Because we hit some maybe chart resistance?
Yeah, some technical levels as well. But yeah, there too, it's just been kind of the dog of the complex, and it has gotten a little bit overbought. So to see a bit of a downturn here isn't too concerning, but I have a feeling it is going to be more technical in nature, because we should have supportive sides. I don't see us making new lows in wheat or anything like that. I think we should be supportive, if not move into the upside here going into the end of the year.
Great. Okay, cattle have traded two-sided already here this morning, and that cattle market, at least we hope that it has bottomed, but the funds still aren't out of their long position yet, and we have a lot of economic news coming at the market here end of year. So where do you see this market heading?
Well, that's the million-dollar question with cattle. It's been so volatile lately, it's hard to really know which direction it wants to go, but we need strong follow-through one way or the other. And right now, we just haven't seen it carry through 2 days, 3 days in a row to really give us a decent direction in it. So some of the outside markets, especially going into the end of the year, could be more of an influence. Like you said, we have a lot of economic reports coming out this week. We have CPI tomorrow, PPI on Wednesday, along with the FOMC meeting with their announcements on interest rates on Wednesday as well. So depending on how that information adds up and affects our outside markets, it could definitely impact cattle from that market. But from what expectations are, is that they'll remain at a pause. It should be positive for outside markets. We could see that Santa Claus rally happening here going into the holidays. If that's the case, hopefully we see it give some support to the cattle markets. But again, who knows? Who knows how the markets are going to end up? We know that there's always an interest rate hike on the table, so we can't rule it out, but we'll definitely know more come midweek. And hopefully by then we'll see either some strong follow through one way or another.
All right. Thanks for joining us, Allison Thompson with the Money Forum. That is Markets Now.